There's been a short-lived rebound on Australia's share market, but warnings about future volatility remain. Jason Featherby from Knight Financial Advisors joins me this afternoon. Jason, how big of a deal was yesterday's market crash?
And Tracy, I guess when the market falls 2% in a single day, it's certainly going to raise some eyebrows. And when that 2% makes it a 10% fall from sort of top to where we are now, it's a pretty big deal. But what we need to remember is that it's not unusual, and the markets do need to blow off steam from time to time. And these corrections, whilst they aren't very nice to live through, they do happen every couple of years or so.
Yeah, sure. We did see a brief recovery this morning before another smaller crash by the closing. But how did our local companies fare, and did they recover somehow?
Yeah, look, I guess when we think of our local companies, the names that come to my mind are Wesfarmers, Woodside and Fortescue Metals. So Wesfarmers and Woodside, they've fallen pretty much in line with the market, although Woodside has also had a falling oil price to deal with. Interestingly, they are both up for the year, even with the recent falls, but both failed to make any inroads into the losses yesterday. Fortescue, for those shareholders, there's not a lot of joy. Their share price has been falling for a year now. China slowing, Trump's trade wars, and then this market correction have meant that the Fortescue shares have been in the doldrums, but they at least recovered about 5% today.
All right, what about for mum and dad investors out there? What's your advice?
Yeah, well, my advice is firstly not to panic and make sure that you don't make any irrational decisions. It's certainly the human thing to do, run for the hills so you don't have to worry about it anymore, but it's not often the right thing to do. What they should do though is get their portfolios out, look at them and make sure that they can be comfortable with two things, that the holdings they have within the portfolios are of a good quality and will not cause them too much grief, and also that the allocation to shares within the portfolio is suited to their tolerance for risk. They should try and get out and enjoy the sunshine and walk the dog and not read too much. And if you've got some cash and they're fortunate enough to have a bit of investment money on the side, start making a shopping list, because these things generally overdo it. And when the time comes, I don't think it's now, but when it comes, there'll be some good bargains out there too.
All right, just quickly, Jason, what about our older generation, those heading into retirement? Yeah,
a bit different for those that are close or at retirement. They need to be a little bit more careful about the risks they take. So again, as a rule of thumb, if you're getting towards retirement, you should have in safe assets about a percentage as how you are old. And even more importantly, cash is king. Make sure that if you are retired and you are drawing a pension, put a year's worth of income aside as cash, and then you can ride out any short-term market fluctuations.
All right, great to get your insights, Jason Featherby. Thank you very much.
No worries.